A recent survey conducted by the Bank of America revealed that 40% of Americans would prefer to be rich and not have to work. It shows how many people want to retire early and spend more time with family, friends, and enjoying life. I'm going to make this video different. I'll do something crazy. I'm going to show you exactly how to build a 100K portfolio from scratch. So let's see if I can turn a little into a lot. And if you find value in today's video, please hit the like button and subscribe for future updates. I know what you're thinking. How is it possible to build a six-figure portfolio without already being wealthy? Well, it's quite simple. Just save and invest $250 per month over the next 36 years at an average annual return of 8%. You'll end up with exactly 100K. The math doesn't lie. But there are three very important factors that will influence whether or not you actually reach that goal. The first is consistency. If you max out your 401k contributions for the next 36 years at an average annual return of 8%, you'll end up with $955,000. The second is cost. If you invest in low-cost broad market index funds, you can expect to earn higher returns at a lower cost. But if you chase high returns by investing in individual stocks or options or futures, you can easily blow up your account in one bad trade. Understand the difference between risk and reward. Higher returns usually means higher risk. And third is emotions. When you feel like the market is falling off a cliff, that's when it's the easiest to panic and sell. But if you stay level-headed and keep buying in consistently, you'll be able to ride out the storm and hopefully capture bigger gains on the other side. Understand your own psychology before you invest in the markets. So now that we understand the theory, let's put it into practice. I came across this article published by the Wall Street Journal titled "How Much Do I Need to Retire?" It was originally written back in 2017, but I believe the information is still relevant today. They asked some of the top financial advisors in the country how much it takes to retire comfortably. And the answers may surprise you. For context, these advisors manage roughly $1 trillion in client assets. So I think it's safe to say that their advice is worth listening to. One advisor said 1 million, another said 1.2 million, and a third said anywhere between 1.3 to 1.6 million. But then, one advisor named Gary Schindler, who works with ultra-wealthy clients, said $100,000. 100K is all you need to retire. How is that possible? Well, the answer lies within his strategy. He manages his clients' portfolios using dividend-paying stocks. At first, I was skeptical, but then I learned that there are companies out there paying 7 to 9% dividends. And that made me sit up and take notice. Let's assume that Gary is correct. Let's assume $100,000 is all you need to retire. If you're able to invest $250 each month at a 9% rate of return, it would take you 27 years to reach 100K. But if you're able to invest the same, $250 each month at a 1% rate of return, it would take you 100 years to reach 100K. Who wants to wait 100 years to retire? No one. So in order to speed things up, let's go for the 9%. But how do you actually get started? Here are 5 steps that you can take today. First, educate yourself on basic finance and investing principles. Understand the differences between assets and liabilities, income and expenses. Learn about cash flow and how to use it effectively. Try to read at least one book on personal finance every year. Second, define your goals and values. What do you really want out of life? What are you working for? What does success look like to you? Determine how much money you need to achieve those goals and create a plan to get there. Align your investments with your values so that you can feel good about the companies you're reinvesting in. Third, establish a budget and track your expenses. Know where your money is going and cut back on unnecessary spending. Track your progress regularly and adjust as needed. There are tons of apps out there to help you do this. Some of my favorites include Mint, Personal Capital, and Rocket Money. Fourth, diversify your portfolio across different asset classes and industries. Don't put all of your eggs in one basket. Invest in a mix of stocks, bonds, real estate, and other assets to spread out your risk. This is a great way to reduce volatility and maximize your returns over time. Fifth, consider seeking professional advice from a financial advisor or investment manager. Don't be afraid to ask for help. A financial advisor can help you develop a personalized plan based on your goals and risk tolerance. They can also provide guidance as your needs change over time. Now let's talk about the secret sauce, how to generate higher returns with less risk. When you buy a share of stock, you're buying a small piece of ownership in a company. But when you buy a share of a dividend-paying stock, you're rebuying a small piece of ownership in a company that pays you a portion of its profits. These payments are typically made quarterly, but there are some companies out there that pay monthly. In addition to receiving capital gains, which is the increase or decrease in the price of a stock, dividend investors receive these cash payments regardless of how the stock performs. That means you can earn money even if the stock price goes down. Imagine owning a piece of Apple right now. Since September of last year, Their stock price has fallen 11%, but they still pay their dividends. That's why Gary Schindler believes that 100K is enough to retire. He invests in companies that pay 7 to 9% dividends, which means he can live off of his dividends alone and never have to touch his principal. That's financial freedom. So let's try this again. Instead of trying to build up to 100,000 in the next 36 years at an average annual return of 8%, we can shorten that timeline significantly by increasing our return. At an average annual return of 11%, it would take us 21 years to reach 100,000. That's 5 years faster. Now, let's plug in a higher number. At an average annual return of 15%, it would only take us 13 years to reach 100,000. Now we're talking. The power of compounding interest combined with dividends can be a game changer when it comes to building wealth. Let's revisit the famous quote by Albert Einstein. Compound interest is the eighth wonder of the world. He who understands it earns it. He who doesn't pays it. Now let's add another famous quote to the mix. The best time to plant a tree was 20 years ago. The second best time is right now. Both of these quotes are relevant today because it is never too late to start investing and building wealth. If you're watching this video, you've already taken the first step towards financial freedom by educating yourself. The next step is to take action. Take the next 15 minutes of your day and set up a brokerage account. Open up a Roth IRA and start investing. If you're maxed out for the next 30 years at an average annual return of 15%, you'll end up with $1.2 million, tax and penalty free at the age of 59 and a half. That's the dream. It's possible to build a six-figure portfolio from scratch, but it takes time, consistency, and a willingness to learn and adapt. By following these steps and staying focused on your goals, you can achieve financial freedom and live the life you desire. So how much do you need to retire? The answer might surprise you. It's not about the number. It's about the journey. It's about taking control of your finances and investing in your future. Leave a comment below on how much you need to retire and check out these related videos for more great tips on investing and building wealth. Thank you for watching, and until next time, happy investing.